As the cost of living crisis intensifies, there's likely to be more in the way of industrial action, with inflation quite so high. But let's just have a look back at the history of strikes going all the way back a century or so. This shows you the number of days lost to strikes. So the higher the bars are, the more strikes basically there have been. And look, 2011, the last year when there were lots of public sector strikes, it's actually not that high, is it? Nowhere in comparison with, for instance, 1970s. There's the winter of discontent, 1979. Or indeed, looking all the way back to 1926, that incredibly high bar there, that's the general strike, really just unprecedented level of disruption for the UK economy back then. And consider what we might be going into now in this year. You're talking about public sector pay, a lot of focus on that and a lot of focus on whether it's kept track with private sector pay. These bars show you how much they've increased over the past 22 years or so. So going back to the millennium, you can see private sector pay, public sector pay, both have gone up quite considerably. But here's the thing, now let's just look back to 2010 and it's a different story. So since 2010, private sector pay up by 4.3%, inflation adjusted. Public sector pay down by 4.3%, inflation adjusted. And that's why a lot of people are saying there needs to be more given to public sector workers right now. But the question, of course, is how much can the Chancellor afford? This shows you how much is spent in total by the public sector. So total public spending, just over £1 trillion. Here is public sector pay. Pay review bodies, so it's split up between pay review bodies and non-pay review bodies. And if you kind of add them both up, you get to about £230 billion. So what we're going to do is we're going to take that slice, £230 billion, we'll put that over there, and we'll work out how much it costs to increase it in line with inflation. So first of all, the inflation that the government thought we were going to be getting, 2 to 3%, that would cost an extra £7 billion or so. But of course, inflation is far higher than that. It's running at about 9%, or expected to be 9% this year. And if you're going to raise it in line with that, you're talking about £21 billion. And the difference between those two things, it comes out at about £14 billion. £14 billion. What's that amount to? Well, if we take that slice and just put it over there, let me compare it to a couple of things. First of all, it's about the same as cutting income tax, all of the main rates of income tax, by 2%, which is precisely what this government would like to do. It comes to about the same amount raised by the Health and Social Care levy, and you know how controversial that was. So it just underlines it. The Chancellor's got some difficult decisions to make in the next few months. Is it going to be inflation rises for the public sector? Is it going to be tax cuts? It's going to be a really interesting period for economic policy.